but we're living in a moment now where investing is attracting younger and younger people. They have a sense the system is broken. They don't know what that means, but that something doesn't work, and so people are trying to find that like quick flip, that quick buck. You get crypto coming, which I heard you say, you may have changed or you may have doubled down, that people that invest in crypto are crazy. I think crypto is fucking interesting as the self-professed guy that is not good at investing, so take that for what it's worth. But there's something happening now between crypto, between GameStop, Wall Street bets, the way that like the collective of people can fuck up hedge funds. Like there's something going on right now where there's a casino mechanic. And people are getting really into this casino mechanic, like even NFTs, which I don't think of as an investment vehicle, but I am very excited about as a technology. But that's drawn me into this world where I see just a gaggle of people treating it like a casino, essentially.
Yeah.
And now that it's sort of high risk, high reward, lots of fun, ding, 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 flashing lights, how many people do you think are getting pulled in a way that's exciting? Like, hey, now you've got 17-year-olds creating YouTube content around investments, which is real, and I am utterly shocked by that. And how much of this is like, oh my God, we're heading towards a cliff?
That's a great question. Okay, let me start off with what happened with my first investments. So here it is, it's around 1999, 2000. Everybody thinks they're a tech genius. You put money in any stock, it goes up 26% the next day. So what do? I take my college scholarship money and I put some of it in the stock market thinking, this is easy
Guaranteed
money.
20%.
Yeah, guarantee. And every day it's going up and down, but mostly up.
Was there massive euphoria? I wasn't focused on this at all at this time.
Yes, everybody was, everybody believed they're a genius. So in a bull market, everybody believes they're a genius. And they all say the same phrase. This time it's different.
It's so funny.
It's such a funny phrase that in the investment world, people make fun of it. They're mocked because it's never different. It's actually the same thing. Bubbles expand, but over time, they mathematically cannot continue. So here we have people making millions of dollars who would otherwise be working in a parking garage, and they are giving stock tips out and telling everybody, you gotta get into this, JDSU, this, all kinds of stuff. So I take my college scholarship money, put it in the market, and I very quickly lose half the money.
Because of the crash?
Yeah, because of the crash. And so what happens is I realize, oh my God, I'm not as smart as I thought. It's not easy to become a millionaire through investing in 2 weeks. And so here is where there was a pivotal moment. One, I could have doubled down and said, I just picked the wrong stock. Let me pick another stock. This is very similar to what you hear with people in the crypto world. Well, my investment, quote, investment dropped 50%, but I got to do this coin or that coin, et cetera. What I chose to do is go a different route and say, you know what? I don't think I'm that smart about investing. And I actually want to learn how fundamental basic investing works. So things like low cost, long term, things like reading about John Bogle's philosophy, et cetera. And I started to learn about it. And I realized you could spend your entire life trying to trade, but traders hardly ever make money over the long term.
And if we were going to define trade, timing the market.
Yeah, it's like...
I understand this stock.
Yeah.
It's undervalued.
Yeah.
I'm going to buy because I know it's going back
And I'm going to do it short term, right? So I'm going to create this narrative that, ooh, this stock, look at the trading, look at the chart, and I'm going to try to make quick money in 4 weeks. Everybody now knows somebody who trades. Those people almost all lose money. You'll notice they're your best friend when they're making tons of money. Hey bro, I made 600% in this stock. When it goes down, you don't really hear from them, okay? That's called survivorship bias. Those people simply disappear, but they're really loud when they're making money. And you learn that mathematically, even top Wall Street investors, over 80% of them don't even beat the market. What does that mean? It means that you watching this show right now can pick a simple Vanguard fund and you can beat over 80% of these fancy Wall Street suits. These guys were paid over $1 million a year. This stuff is really hard to believe. It's really hard to believe because it's counterintuitive, like 1% fees can be 28% out the door. People also don't understand compound growth. So for example, a lot of people right now are really dissatisfied. Hey, I don't have enough money. I'm not going to ever be able to afford a house. And so therefore, I'm going to have to invest in these high risk investments that are pure speculation. What's really happening there is they don't understand how compound interest works in 1 year than the last 20 years combined.
Because of
compound interest.
Right.
Yeah, because of how it works. So
is it really as simple as 1 doubling to 2 isn't very interesting, 2 doubling to 4 is not very interesting, but when you start getting to 1,000 doubling, that becomes real interesting real fast.
And it happens. And we know the math. If you plug in your numbers to a compound interest calculator, you can predict essentially down to the month and year when you will become a millionaire.
And does that calculate a doubling every 7 years, or is that a made-up thing?
No, you can change your assumptions. I generally choose a 7% return rate, 7 to 8%, because historically that's what we know happens, and that factors inflation in. So at roughly 7 to 8%, your money's doubling approximately every 10 years.
And people are going to get that by putting it in the stock market and
letting it sit
forgetting
there.
about it.
And just contributing to it every single month.
Dollar cost average.
Yeah, $50, $500, $5,000, whatever works for you. That's how it works. That's simple, boring. So a lot of people watching this going, oh, this old guy, this Luddite, I prefer crypto, it's really exciting. Listen, investing is not about excitement. You want excitement, get a dog, watch a TNT drama. Investing is boring. It's like watching concrete dry, and it should be. The real fun is what you do with your money, how you live a rich life.